Yeah, I'm confident I've got the best bank CEO job in the world and maybe one of the best CEO jobs.
That's Greg Becker, the now former CEO of Silicon Valley Bank in 2021. 2 years later, federal regulators seized control of the lender as it stood on the brink of collapse.
Banking industry.
The collapse of Silicon Valley Bank. The second biggest bank collapse in U.S. history.
In the U.S., where some of the world's leading money managers are warning the collapse of another American bank could lead to a credit crunch and an economic slowdown. Constrained lending as a result of stricter banking regulation could stifle credit to the U.S. economy at a critical time.
U.S. banking crisis of 2023 was one of the worst in the global financial industry since the 2008 subprime mortgage crisis. And this crisis was actually triggered by the aggressive interest rate hikes by the US Federal Reserve. So I'm going to explain how exactly this affects banks. So the value of government bonds have an inverse relationship with the interest rates. This relationship is called as the interest rate risk. So I'm going to explain this in detail. When inflation is high, government will hike the interest rate to reduce spending and curb inflation. So this is general practice. And now government bonds typically pay out a fixed amount as interest to the bondholders. Say you own around $1,000 worth of government bond with a 3% coupon rate, you will receive $30 as an annual interest. So when the interest rates increase, the newly issued bonds in the primary market will have higher payouts and will be more attractive to the investors compared to the previously existing bonds already being sold in the secondary market. So now to incentivize the investors to purchase these lesser paying bonds, their prices will be slashed. And this is exactly what happened with the banks. And that's how they went under in 2023. So the decrease in the value of the government bonds held by these banks led to huge losses by them. And Silicon Valley Bank suffered the same way, and it ended up having to sell a lot of its portfolio for massive losses. And to plug the hole created by these losses, it announced a 1.75 billion capital raising, and this told the investors and the customers about the bank's poor financial decisions and led to a good old-fashioned bank run, which essentially means when customers pull out their money en masse. Credit Suisse, on the other hand, failed due to a variety of reasons, including a series of scandals, management shifts, and significant losses in past recent years.
Thanks for the bank ground, Kev. So I had to come up with that. Honestly, I don't know. But okay. So that was a creative kind of word added into the dictionary. So some interesting information to know about the U.S. banking crisis that happened throughout the years. So it is said by Forbes that bank failures happen more often than you might think. So even we're not really aware of our surroundings, honestly. Like as much as we learn lots and kind of see like news articles and stuff, we're still unaware. Just like 3% of the ocean is still undiscovered. We basically still have like
Just
so
to
much more.
quickly butt in, I think there was a statistic that said 1 in 8 banks will fail by the end of December this year in the UK. I think that's really interesting to the point that you just said. People, you don't really realize the number of banks that are failing on a daily basis.
I was talking about the ocean, but okay. So anyway, back to my conversation. Yeah. Thank you for that input, Kev.
You're welcome.
So there have been about 565 banking fails in the US since we entered the new millennium, which is an average of about 25 per year. So pick a struggle, basically. Like there's so many things going on in the US, and just pick one struggle, it's enough. What researchers found extremely unique about this year's banking crisis was the back-to-back collapses of the Silicon Valley Bank. And it basically was just, series of failures over failures. So it just had to end up as a complete fail. But anyway, the article also looked into the comparisons of between the recent collapse and the previous earlier bank failures. But I think, and I thought it was a good idea to kind of look into a graph, and we can maybe try and make a precise prediction of the future. So, what do you boys think? Should we make a little trip down memory lane into the mid 2000s?
Yes, I think that'll be interesting, Hamza. Why don't you enlighten us on 2008
I would love to. I'd
crisis?
love to, Hamza. Yeah, take me on this journey.
So here we can see that bank failures were just a bit uncommon in the early 2000s, and from 2001 to 2007, we can see that it's just an average of 3.57 bank failures per year. But when the US declared a recession in December of 2007, we can now see that there's a spike from 2008 to 2012. So that's like this shows that bank failures shot up to an average of 93 per year. So that's a lot. I mean, no wonder it was called the Great Recession. So remember that I said 565 bank failures earlier? Well, 465 of those occurred between this time period, 2008, 2012. So, and of course, the peak was 2010. Very obvious. It's just the sharp tip there. So I felt like it was kind of good to visualize this and kind of show everyone, what was going on in the US at the time. So now that we're in 2023, and it seems that we should be somewhere just at the start of a new banking crisis, do you think that we'll see another 2007-08 banking crisis? So I guess that's my question for you guys.
So I don't know if you guys have seen the movie The Big Short, but if you have, you'd know that the financial crisis in 2008 was massive. Everything was over leveraged, and it would be incredible if that could happen again. We got strict regulations in which should avoid any kind of catastrophe. And as we can see in the graph, that really visualizes just how bad things were. So you would hope that there's new regulations being put in place and we shouldn't ever go there again. But you bring up an interesting point that I was going to bring up later on, that at the end of the day, humans get greedy and we make mistakes. And you could argue that that's always going to happen throughout time. And even if there are these complex rules, are people going to find a way around them and do something similar?
I mean, yeah, Hamza, I think I don't personally see a crisis like the one we had in 2008 happen again, at least not now, but at least not to my knowledge, because this one was caused by, you could say it was essentially caused by inflation and bad investment decisions, as opposed to the one back in 2008, which was just that was just rampant purchasing of subprime mortgages, and that was just pure greed compared to what we're going through now.
Yeah, it's interesting though, because though that rising inflation and rising interest rates has come about in a lot of cases from the Ukraine war, though. So potentially in times of strife and times of trouble, we could see more things like this happen. But I agree with Kath. This is a different type of crisis. It's not a greed one. It's more of a economic and a war crisis. So hopefully it wouldn't be as large scale as 2008.
Yeah, so there are multiple articles that talk about this, and I guess the US is kind of indicating that there wouldn't be such a recession as before, as the 2007 2008. So they're not really forecasting anything, and they're saying that it's expanding actually for some reason at a healthy pace. So I mean, I guess that we won't really know, but it definitely won't be as the same impact as last time in the US specifically. But we don't really know what will happen with UBS and Credit Suisse. So maybe that's another point of discussion, Could definitely be talking about that. Maybe it's Europe's time now, so.
I really hope not, Hamza. Oh.
Not that I'm happy about it, but who knows?
It's interesting you talk about Europe, Hamza, and potentially some financial disasters happening there, because I just wanted to take a moment to take a trip down memory lane. And I know we're not a history channel, but I wanted to talk about Switzerland and its historical roots within the banking sector. So for a very long time now, around 80 to 90 years, Switzerland has had a reputation for being a safe haven, for having one of the best financial sectors in the world. And one of the ways they achieved that was through their secretive rules and beneficial banking systems. So, for instance, the Nazis were known to have stored their gold in Switzerland, and Switzerland are known for not getting involved in wars. They've held all kinds of assets within their banks.
You just said that Switzerland usually doesn't involve themselves in wars, and then people look at Switzerland as a safe haven to like store their assets without without receiving much attention to it. And I think the Swiss government was recently forced or something to come up with some kind of financial policy that makes it so that people can't use Switzerland as a financial safe haven anymore, because people use trust funds and such to store their wealth in Switzerland so that it doesn't connect back to them. So, but now it's so that they've made it so that the actual beneficiary, has to be announced or has to be shown to the others. But even though it won't be available to the general public, it'll just be available to the officials. So essentially, I don't know how that's going to work, but I just wanted to add that.
In relation to what Kev and Will said earlier, I think that, we all kind of had this idea of like Switzerland is not only an amazing place to kind of travel and, ski, but it's also, like, as you said, like a safe haven for people kind of depositing their money into their banks and stuff. But I realized that recently Switzerland has been kind of going out of their neutral state in everything. So, like, not only in terms of like financials or something, but in terms of like the Russian-Ukrainian war. I'm not going to comment much on that, but they did decide to add sanctions on Russia. So they kind of are not neutral as they were before. So same thing goes on to, financials. It's kind of weird seeing Switzerland kind of being bold, and kind of going and just doing stuff. So, I guess it's just experience.
No, that's interesting that you say that, Hamza, because as I was kind of saying, Switzerland had this historical perspective of secrecy and its large banking financial sector, but it's somewhat moving away from that. And that's largely due to regulations that have been put in place. We can see that from a period of 2009 to 2014, assets actually have outflowed from Switzerland and gone over to Asian countries. And one of the large reasons for that was because in 2010, America created a tax on US investors of 30% if they didn't declare their assets in foreign banks, i.e. Switzerland. So this created a massive outflow from Switzerland itself. So in 2004, 9% of global assets were in Swiss banks. In 2009, it was 4.2%, and now it's considerably less as well. And two of the major banks that we're kind of talking about in this episode are Swiss, UBS and Credit Suisse. And kind of moving on, thinking about Switzerland's potentially shady past, this is maybe why Credit Suisse would have survived in the past, but now some of the major reasons for Credit Suisse's downfall were money laundering for Japanese gangs, aiding in the cash management of Bulgarian drug traffickers, the US tax evasion that I've just mentioned. They were spying on employees, they were aiding African dictators with their cash management, and their new CEO, which they hired to change the culture in 2021, was fired in 2022 for breaching COVID rules twice. So we can see that Credit Suisse there had a long list of suspicious activity, which maybe in the past they would have got away with, but now with more eyes on Switzerland and more rules coming in, they really did not stand up to the heat. At least Credit Suisse didn't there. In October 2022, there was a run on the bank, which means depositors go in to get their cash before it runs out. Credit Suisse gave out over $100 billion in a one-day period, with them running out of cash, which means they then need to sell their assets. And much like Silicon Valley Bank, they sold these assets at an unrealized loss, which creates this downward spiral and leads them into financial ruin. UBS came in to acquire Credit Suisse for $3.3 billion. But interestingly, UBS didn't have much contact with Credit Suisse over this process. It was actually the Swiss regulators who organised this deal and actually went around the shareholders, not having a vote and completely ignoring them, to get this deal finalised within one day, which is a process which would normally take 6 weeks. So that kind of shows the difficult situation that the Swiss were in and the worry around this issue that followed on from the Silicon Valley Bank and the American banking crisis as it spread to Europe.
Yeah, the Swiss did try their best to sweeten that deal for UBS, because they even wiped out around $17 billion of Credit Suisse liabilities prior to the purchase, and they got a really good deal because they purchased bank for around $3.3 billion, which is really good, because right now they in August 31st they actually revealed the highest ever quarterly profit for a bank, which was a whopping $29 billion. But this was a direct result of the accounting difference, because they acquired Credit Suisse dirt cheap compared to the actual balance sheet value of the lender. So this is what you call as negative goodwill, and it is recorded in the acquiring bank's balance sheet as a gain.
It's interesting that you talk about the balance sheets of the banks, Cav, because I actually have a fun little thing I'm going to slip you guys up on, a little trick here. So the market cap of UBS is currently $55 billion. So that's how much the company's worth if you want to buy it. So my question to you guys is, how many assets, what value of assets do you think UBS has on its balance sheet? And now to give you maybe a little hint or a little trick, Apple is worth $3 trillion and it has around $300 billion of assets on its balance sheet. So about 10% of its value is assets. So if UBS has a value of 55 billion, what value do you think the assets are? And the liabilities are somewhat similar.
I would say they did get a lot of they did acquire a lot of assets from the asset management division of Credit Suisse when the merger or the acquisition went through, and I want to say around 15 to 20%.
Okay, so maybe around $5-10 billion. Hamza, do you have a guess?
I would say around 22, $23 billion.
22, 23. Hamza, have you got a guess?
Okay, so is it in the billions or the trillions?
Trillions.
Trillions? No
Yeah, so
way.
I'll just say, but yeah, I didn't think you guys would know this, but kind of the way banks work is, and this is why interest rates have such a massive effect, is because they have an enormous amount of assets. So UBS currently has $1.678 trillion of assets on its balance sheet, but it also has $1.59 trillion of liabilities. So what it's doing is giving out loans, but it's also bringing cash in, and it's taking such an enormous amount in. And the more it takes in, the more it can make on the interest rate difference between what it lends someone. So they might lend someone a loan on 5%, but give them an interest rate on their cash of 4.5%. So it's that 0.5% percent margin that it makes its money on, and that's why they have to have such a large amounts of assets and liabilities. But then we can see how the Silicon Valley Bank between 2020 and 2022, their assets massively increased, and it was mainly with short-term treasury bills. So you can see how when the interest rates started rising, they got slammed straight away. So what do you guys think about that? Can you visualize like a company's worth 55 billion and they have assets of 1.6 trillion?
I mean, that would be one of the main reasons why it really got screwed over when some of their assets took a huge dive. I still don't get how they wouldn't have, predicted that when inflation is high, banks are bound to raise their interest rates. At the central banks are bound to raise their interest rates, and the outdated bonds that they'd have is obviously going to be dirt cheap, or it's not going to be of the same value. So I don't get like why wouldn't have thought of that. Like, it seems pretty straightforward. But I'm pretty sure there's more to it.
Yeah. There's a concept called risk of ruin, and it's the idea that you can increase your risk, but you'll also increase your risk of ruin. So your risk of ruin might be 1%, but then that's the chance that your company's going to go bust. And I think it makes financial sense to not have a risk of ruin that's zero, but there's always a slim chance, and this could be that infinitesimally small chance, and it got them. But yeah.
So now, since you've seen that, UBS has done quite well in its quarterlies, even though most of it was due to an accounting advantage. How do you think UBS is going to fare in the future post this acquisition? Like, what do you think? What do you guys think? What should be the core areas that UBS should be looking at tackling, and what are the challenges you think it'll be facing?
I think a lot of it is restoring the consumer's faith in Credit Suisse. As I said before, there was a lot of scandals, a lot of management kind of running away or doing things wrong, and I think they need to restore their reputation. And I think they're going to be doing a lot of streamlining. So I read that UBS is going to be firing 40,000 people, 20,000 from the Credit Suisse divisions and 20,000 from the greater UBS. And with the total plan of trying to save $10 billion over the next year. So they're going to be making a lot of cutbacks, a lot of streamlining. I can't remember if it was pre or post acquisition, but Credit Suisse got rid of their investment division. And there's a lot of staff moving around as well from different offices. So UBS are currently closing the Credit Suisse division in Canary Wharf. A lot of staff are going back to New York, and the graph I showed earlier showed that Asia is getting a lot of investment and infrastructure. So there's some movement around the Singapore offices as well, but I think a lot of streamlining.
Actually, that's a very interesting point that you bring up. So, current about the firing of employees, because there is supposed to be an election coming up in Switzerland in the next few months. So there has been some political pressure on UBS to not fire as many people from Credit Suisse, because then it would affect the ruling parties badly, because people would lose their jobs, and obviously they wouldn't want that. That would worsen the already tarnished reputation of the Swiss government. So, but let's say that there was some pressure on UBS to go for a sale of the assets they acquired or to demerge it from Credit Suisse. So let's say even in case such an event happens, that sale is still likely to be much above the 3.3 billion UBS paid for Credit Suisse. So in both scenarios, UBS is likely to come off with a little bit of a profit. And actually, there was a study that was done by Coombs that highlighted that a demerger could worsen the embarrassment for the Swiss authorities. So it could essentially worsen the situation. So I would say the stakes are really high for UBS on this one when it comes to Switzerland, and yeah, that's just mainly one of the challenges that they'd face because they also mentioned that they won't be firing any employees of Credit Suisse till the end of 2024. So that should give them some time to plan out the changes.
Yeah, but all of this could have been avoided if, you know, UBS and Credit Suisse, like if they didn't actually have, sorry, I'm talking about Credit Suisse, if they didn't have like these scandals. So, you know, like the US, for example, had to experience things like the housing bubble burst, like the housing market crash in 2008. So that is kind of like a significant event and something that is actually, you know, something to do with kind of like the nature of the economy and how it works. But what happened to Credit Suisse is just a bit artificial. It's kind of like their own fault because they were kind of doing this. Like they weakened their own reputation, and they lost trust from their clients. So it kind of over time it became, you know, untrustable. So people weren't able to kind of, you know, they were just a bit scared maybe.
Yeah,
putting
I
money
get
into
that, but I would say that in both cases there was some both in the 2008 financial crisis and the banking crisis we had this year. There were cases where people were just taken over by greed and they just did some activities that aren't exactly legal, or they overlooked some things. As in, if you look at the 2008 crisis, they sold the credit backed mortgages that essentially didn't have like a very good credit rating, or people were defaulting on loans. Essentially, they just because these MBS were being sold at there was a lot of demand in the market for the MBS. They just kept on adding uh, mortgages that aren't essentially don't have a good credit rating, so that they can have something to sell. So there was greed in both places, and there was I wouldn't say it was oversight. It was they must have known it, but they didn't essentially see the long term impacts it could have. Because at the time, what the actions they did was something that every other bank was doing, and everyone was making huge profits off of it. So they didn't look into the number of people that were defaulting on the loans because housing market prices were going down. And so I wouldn't say it's similar for the situation now, but it is in a way when you think about where people just decide to go for profits over doing what's right or looking at the model sense of business.
Interesting point, because lots of people say this is based on like public opinion, and lots of people say that putting your bank in like US banks is one of the safest and most secure like decision you can take. So it's interesting how like people still do trust like US banks and things like that, so they'd still put their money in them. uh, but I just feel like it's more about how like the exposure that they had and to what event. So for example, like they had the way like the government had to deal with it and the federal bank, and like they kind of worked together to kind of fix the issues. So even though there was a great recession and the financial crisis, people are still kind of having their trust in the banks in the US, and this I'm referring to the US. But in Switzerland, it's just a bit different because, as you said, like the greed and kind of like losing trust over time is kind of hard to gain back, and it's something that has been done internally. And it's just a bit harder to fix because you're dealing with kind of like the people.
Mm-hmm.
You're
I mean, it's
affecting.
also different because I feel like Swiss banks have always been known for being a safe haven for people who want to avoid taxes or don't want to disclose their incomes or their assets. So it's always been that notorious place where people, not I wouldn't say criminals, but like people, just really rich people who want to avoid taxes and just not disclose their incomes and stuff like that. They just use shell corps or foundations to like to have an account there. So, and essentially they wouldn't have to reveal the beneficiary. That was the one thing that almost every other country in the EU has, but Switzerland doesn't. And they have recently come under fire for that. And I think they are in talks for introducing some kind of policy where the actual beneficiary of each account created in Swiss banks will have to be revealed. As in, before lawyers could even open up accounts for their clients, and they wouldn't have to reveal who it is being opened up for. But now they'd have to actually reveal the actual beneficiary of any
So
account.
do you think that would negatively impact?
Okay, that's it's a good question, because while they did say that they're going to make it with it going to be make it so that the beneficiary has to be revealed, they're not going to be revealing that information to the public. It's just going to be revealed to a few people. So again, they're not going for full transparency there. There's still scope for some kind of foul play, but you never know. But I think it's a step forward.
I was just curious there because, I know a lot about like Switzerland being the safest
Yeah.
ever, but just kind of seeing this, and I wonder what's in the people's minds there. Like kind of being, maybe I don't
Well,
know.
that's it,
Couple
Hamza.
members.
It had this reputation, but as we saw earlier, there's an outflow now. There's a lot of tax regulations coming in with the US, constricting Switzerland. That opened up the door for the EU to have a look in and see what Switzerland were doing. And now the unscrupulous things that Switzerland might have been able to get away with in the past, they've lost that anonymity, and they're becoming visual to the world, and they've had the run on the banks.
All right, boys, I think it's time to put this episode into a close and give our podcasters a little insight into what we talked about. So in this episode, we covered the US banking crisis and how this spilled into Europe, causing chaos at UBS and Credit Suisse. And we also gossiped a little bit about Credit Suisse scandals. Don't tell them that. So if you enjoyed our podcast, please do not forget to like, comment, and subscribe. Hit that notification bell button so you can always get an update from us. Stay tuned for more content on our social media platforms. Follow us on TikTok, Instagram, and LinkedIn. We'll be on there soon. We've been the Business Boys, and we'll see you in our next episode.
Got it right this time.